Hey friends, I've got some news to share with you today. Next week, I'll be taking a short break from December 1st to December 12th. This means our daily market updates and news podcasts will take a pause. I know many of you tune in every morning for market insights, but even iguanas need a vacation sometimes. This break will help me recharge and come back with fresh ideas for the channel. I've lined up some exciting content for when I return. Meanwhile, here's the daily stock update for today.
Hey everyone, welcome back for another deep dive.
Always a pleasure to be back.
Today we're going to be focusing on a few specific companies making waves in the market. IHH, DigiCore REIT, and ST Engineering. Got some interesting things happening there.
Definitely, those are some big names.
Oh, and we can't forget about the Monetary Authority of Singapore. They just dropped some new regulations that are going to shake things up for REITs. So, yeah, plenty to unpack today.
Sounds like it. Eager to dig in.
Let's kick things off with IHH. They're a giant in the private healthcare scene. Just released their earnings, and, well, some things are a bit puzzling.
Oh, how so?
Well, they pulled in a profit of RM 534 million.
Okay, not bad.
Yeah, which is pretty much the same as last year, so flat. But their revenue actually dipped, went down 3% to RM 5.6 billion.
Huh. That is a little strange. Profit holding steady, but revenue going down.
Exactly. So the question is, how can that be?
Well, got to factor in inflation, right? Healthcare is being hit with rising costs everywhere. Supplies, staffing, the whole 9 yards. So even if IHH is seeing the same amount of patients, their profit margin is probably getting squeezed.
Yeah, makes sense. If you're invested in healthcare right now, inflation is definitely something to keep an eye on.
Absolutely.
Okay, let's switch gears over to DigiCore REIT. They're all about data centers. Word on the street is they're upping their stake in a Frankfurt data center.
Interesting. Data centers are hot property these days.
You got that right. But here's the thing. They're being super secretive about how much they're increasing their stake by.
Really? That's odd.
Yeah, the word is it could be anything from like a measly 0.2% to a massive 40% increase, on top of the 49.9% they already own.
Wow, that is a huge range. What's their game?
Right. Makes you wonder, what are they thinking? What's influencing their decision? Are they just waiting to see how certain market conditions play out?
Could be. Data centers are a huge energy suck, and we know Europe's energy landscape has been, well, let's say unpredictable lately. Maybe they're just being cautious before going all in.
Yeah, that's a good point. You really got to think about all the angles. All right, let's move on to ST Engineering. Their share price took a bit of a tumble recently, but RHB, the financial services group, they're still pretty optimistic about ST Engineering's future.
Interesting. Why do you think that is?
Well, it seems like you got to look beyond the day-to-day stock movements. ST Engineering's actually been performing really well this year, especially their defense and public security division.
They have.
Their revenue jumped 18% compared to last year.
Wow, 18%. That's impressive.
Yeah, so sometimes those stock fluctuations don't tell the whole story. You got to dig a little deeper and look at the company's performance. Think long term.
Good advice.
All right, last but not least, let's talk about something that's going to affect the whole REIT landscape in Singapore. The Monetary Authority of Singapore, MAS, they just announced some new leverage limits.
Yeah, I saw that. Big news.
It's all about stability and transparency. They set a minimum interest coverage ratio of 1.5 times, meaning REITs got to earn at least 1.5 times what they're shelling out in interest expenses.
Makes sense. And what about the leverage limit?
Capped at 50%. Plus, get this, there are new disclosure requirements that'll kick in around March 2025. So more transparency, but potentially less room for high-flying returns.
Yeah, that's the trade-off, isn't it? Less risk, but maybe a little less excitement for investors. It's all about finding that balance.
For sure. Okay, so we've covered a lot today.
We have.
IHH, holding steady despite those dipping revenues.
Right.
DigiCore, making some strategic moves in the data center market, but keeping their cards close to their chest.
Very mysterious.
ST Engineering, solid performance, even with that recent stock dip.
Strong fundamentals.
And, of course, the MS, tightening the reins on REITs with those new leverage limits.
Stability and transparency, those are the watchwords.
Exactly. So, after hearing all of this, what do you think? What bigger picture is starting to emerge from these seemingly unrelated stories?
That's a great question. We've got healthcare grappling with inflation, data centers racing to expand, the defense sector holding strong, and regulators stepping in to make things a bit more predictable. Makes you think, doesn't it? What's the common thread here? Maybe it's about navigating uncertainty, finding ways to adapt and thrive in a world that's constantly changing. I don't know, that's something I'll definitely be pondering.
Me too. Lots to think about. Thanks for joining us for this deep dive. and we'll catch you next time.
See you then.